John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hey there, this is John Ulzheimer. I am a consumer credit expert. I have over 30 years of experience in the credit industry, just hit my 30-year anniversary. I have spent time at FICO, which is the company behind the FICO credit scoring system, and Equifax, which is one of the 3 generally recognized credit reporting agencies in the United States. So today we're going to talk about credit scores, not specifically about kind of the architecture of credit scores and what makes your credit scores high versus what makes your credit scores low. We're going to talk specifically about who is looking at your scores or what organizations look at your scores. So just to give you an idea of just how massive of an industry the credit scoring systems deal with, when you combine FICO with VantageScore, which really encompasses 100% of the credit bureau score market in the United States, we're talking well over 20 billion, that's with a B, we're talking well over 20 billion scores are used every single year. So we're talking about, multiple times the population of the globe as far as volume goes of the usage of credit scores. So they're a big deal, right? They're used a lot. So who's looking at them? Every lender with whom you do business is going to look at your credit scores, right? So your mortgage lenders, your auto lenders, your credit card issuers, student loan, personal loan, boat loan, motorcycle loan, you name it. If a lender is going to be letting you borrow money, then it's unbelievably highly likely that they're going to pull at least one of your credit reports and at least one of your scores. So clearly for lending, and why are they doing that? Credit scores are a proxy for the information on your credit report. They summarize the data on your credit report into a 3-digit number. Under the FICO or the VantageScore scoring platforms, those numbers fall between 300 and 850. The higher your score, the better risk you pose to a lender, the more likely you're going to get favorable treatment from the lender in the form of approvals and really good terms. Insurance companies definitely use scores, but they do not use the same scores that banks and lenders use. That's a huge myth. People just think a score is a score is a score, and that's absolutely not true. Insurance companies use insurance credit scores, and so they're slightly tuned differently, and they're based on information in a credit report, but they're predicting the likelihood of you being a profitable insurance customer. So they're actually called insurance credit scores, not credit scores. They're also used to predict the likelihood of you filing a claim, which obviously is not something that insurance companies want you to do, even though that's what they're in business for. So certainly insurance companies use credit reports and insurance credit scores. Collection agencies, you're probably wondering, whoa. Why in the world is a collection agency pulling my credit report and looking at my score? Collection agencies have the right to pull your credit reports under the Fair Credit Reporting Act. They can do so for things like skip tracing, any efforts to help collect debts. They absolutely can pull credit reports legally. They use a different variety of credit score. That type of credit score is used to determine whether or not you're likely to pay them. So in other words, your propensity to make payments on defaulted debts, because obviously collection agencies are collecting on debts upon which you've defaulted. So they want to know the likelihood of you actually paying them back so they can prioritize their collection activities. Things like tenant screening, they definitely use credit scores. They're probably going to use the same scores that a lender is going to use because it's still an assessment of risk. So let's go ahead and dispel the myth, which is the 500-pound gorilla in the room right now, which is employers. I know people are like, employers use scores. Factually inaccurate, demonstrably inaccurate. Employers do not use credit scores. Employers have the ability to look at credit reports. They do not have the ability to look at credit scores. This is a problem with bloggers, is they've kind of perpetuated this myth over and over again. I think the problem is that they use the word credit score with the term credit report interchangeably as if they're the same thing. Employers do not have access to credit scores. They're not on the variety of credit report that they have access to, which by the way isn't the same credit report that lenders have access to. So huge difference between employment use of credit report information and a lender's use of a credit report and score information. So that's about it as far as what types of organizations use scores. So hopefully it helps and clarifies some of the myths and incorrect information that floats around out there in the blogosphere. If you have any other questions about credit scoring systems or who uses them or why, then drop them in the comment section below and I'll do my best to get to them. Thank you for watching. Have a great rest of your day, and we will speak again soon.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.